be up standing for the national anthem.
And sing of Zambia, proud and free, land of wealth and joy in unity, victors in the struggle for the right. We won freedom's fight, oh, one, strong and free. Africa is our own motherland, fashioned with and blessed by those good men. Let us, all our people, join as one, brothers under the sun. Oh, one, strong and free. One land and one nation is our cry. Dignity and peace in Zambia's sky, like a noble eagle in its flight. Zambia, praise to thee, oh, one, strong and free. Praise be to God, praise be, bless our great Zambia, Zambia, Zambia. Green and we stand under the flag of our land. Zambia, praise to thee, oh, one, strong and free.
Let us remain standing for a prayer by Mr. Nondo Musonda.
Shall we pray? Our Heavenly Father, we want to thank you this morning. We want to appreciate you for the life that we have continued to enjoy up to this very morning. Father, we also want to pray for the governor and the MPC members that they may receive wisdom in their decisions that they are making on behalf of this nation. Father, we also want to pray for this nation that it may enjoy peace in all sectors of the economy. We also want to pray and ask that you may also help the journalists who are here to carry the correct information that they need to disseminate to the public. Father, we also want to pray, and knowing that the rains in this nation, the rains in this economy are an important factor. We also pray for divine intervention that the rains may continue so that we may have that harvest that we need in this country. Father, we want to appreciate you, we want to worship you, to adore you, and we ask all this in the matchless name of Jesus Christ. Amen and amen.
Thank you very much, Mr. Nondo. We may be seated. Allow me to acknowledge the presence of the governor, the deputy governors, members of the Monetary Policy Committee, directors from the Bank of Zambia here present, colleagues from the media, ladies and gentlemen. I welcome you all to our first Monetary Policy Committee press briefing for the year. As you may be aware, the Monetary Policy Committee has been holding its meeting over a 2-day period. Governor will be announcing the decision of the committee. To our online audience, we acknowledge your presence. We say thank you very much for your time. Let me introduce the dignitaries that are in front of you this morning. You may have noticed a change in the composition of the Monetary Policy Committee. This follows the operationalization of the new Bank of Zambia Act of 2022. So we have the Bank of Zambia governor, who is seated in the middle, flanked by the 2 deputy governors. On his right, we have deputy governor in charge of operations, Dr. Francis Chipimo. And on his left, we have deputy governor in charge of administration, Mrs. Reka Chifue Muhango. Next to Mrs. Muhango, we have acting director, financial stability, Mr. Goodson Kataya. Next to Dr. Chipimo, we have director research, Dr. Jonathan Chipili. Without further ado, I will at this point invite the governor to address the House. Governor, sir.
Let me join Bessie and Brian in welcoming you to this first meeting of the year on our Monetary Policy Committee. Let me just take the indulgence to introduce. There are two new members to the MPC as well, who are external members. They are seated just behind Bessie. There are those of you who can see. We do have Professor Munachinga Smatele and Mr. Alex Chakufyali. This is the first time that they are attending this meeting. The other members are the old ones who you know already. As indicated, the presentation this morning focuses on what transpired in the fourth quarter of last year. But as always, we also look ahead the 8 quarters to 2025 to see what inflation will be like. And that also informs us in the decision that we make. Let me also indicate to you that the statement that is issued is much more comprehensive, much more smaller this time, because later this month we'll be publishing the full report of the monetary policy. This is going to be the way going forward as indicated or spelled out in the Bank of Zambia Act of 2022, which Bessie referred to. So these are some of the changes that you'll be seeing going forward. Okay, let me just share with you the outline. There are 6 elements to the presentation. First, as always, is to share with you the decision of the Monetary Policy Committee meeting, which we had since Monday to yesterday. And then we look at inflation outturn and outlook, which is the major focus of the Monetary Policy Committee. But we bring into the discussion the issue of the foreign exchange market because it has a bearing on what goes on with our inflation in the country. We look at credit developments as well because, as has been indicated by Brian, the decisions we make here transmit through the financial system. So we want to share with you what we see in the credit market as well. Then finally, before the conclusion, we touch on what we see happening in terms of economic activity. And finally, we do provide a conclusion. At its meeting held between Monday and Tuesday, the Monetary Policy Committee decided to increase the policy rate by 150 basis points to 12.5%. The decision was informed by a number of factors, but the key ones were that inflation is increasing, as we'll see in the slides, or as you have already heard from Zamstat when they do their monthly briefings. The second major factor is that when we looked at the forecast of inflation over the forecast horizon, we see that actually it's moving further away from the target band of 6 to 8%. Now, the idea behind raising the rate, therefore, is to try and steer inflation back into the target band in the medium term. In raising the policy, the committee was also cognizant of the developments in the financial sector, in particular issues of financial stability. As has been indicated, we now have a colleague in the MPC in charge of financial stability. Obviously, inflation is not looked at in its own accord, but we look at what happens to growth. Hence, the last slide I mentioned there, or the last item before the conclusion. Now, what we see is that the exchange rate has persisted to depreciate against the major currencies. I think this is something which has been in the media, which you colleagues have been carrying, and obviously this has had a big bearing on inflation in our country. Now, the key drivers that we identify behind this has to do with the food, in particular maize and maize products, and energy in the form of fuel, whose prices have been going up continuously for some time now. In our discussion, we noted that inflation has risen on average 12.9% in the fourth quarter from 11% in the third quarter. We note too that inflationary pressures have continued into this year, in that in January, inflation inched further up to 13.2% from 13.1% in December. So let's see graphically, or the table here, which gives you more information on what I've just said. This table is in two main parts. The upper part, which looks at the average changes in inflation, and the bottom part gives us the story in terms of end period figures. So if you look on the upper side, take the first column after the quarter description there, you see overall inflation. You see that in Q4 2022, inflation averaged 9.8%. It came down slightly to 9.6% in the first quarter of 2023. Then it started to rise in the second quarter of 2023 to 9.9%, then to 11% and 12.9%. The last two figures are the ones I referred to in the first slide there. Then the next two rows shows the divide between food inflation and non-food inflation. There too, you see that inflation is rising. Obviously, it goes without saying that these are the ones which are responsible for the first row numbers there, these two numbers here. But what is important for us is to see how the two big components are behaving. There too, you see that they are both rising. Then in terms of the end of period numbers, again, the first row there is showing you the overall inflation in terms of end period. So in Q4 2022, it was 9.9%, stayed the same in the first quarter of 2023, but it came down slightly in the second quarter of 2023, but went up in Q3 2023 to 12%, and the 13.1% I referred to for December last year. Again, the last two rows are showing that in terms of the components, the main components of inflation. Now, when we look now at the outlook, this is the outturn that I've just described. We see that the forecast in November was showing that inflation was going to remain above the 6 to 8% target band. The current forecast shows that inflation is actually moving further away from the target band. This is best depicted on this chart and the table 2 on the right of the slide. So if you look on the left side of the slide, you see that the heavy black line, that's the actual inflation which you have just described. Then the two dotted lines, one in red and the other one in black, show the different forecasts that have been made. The red one refers to the forecast that was done in November last year. You can see clearly there the inflation was above the target band, which is that block there in a brownish color. Now, for this quarter, our projection is that inflation is actually moving further away from the target band. That is depicted by the black dotted line there. In terms of numbers, is what table 2 is trying to show for the 2 years, that is 2024 and 2025. So again, here, if you look, the first row there is showing in number terms the projection for inflation, which was made this time during our sitting, which is that in 2024, inflation is going to be averaging 12.5%, and in 2025, 9.9. I must quickly point out that 9.9, that refers to the first quarter of 2025, because we are projecting over 8 quarters, not the full year of 2025. Then on the second line, I stand to be corrected there, let me not mislead you, because the 8 quarters, I think, will be up to 2026 first quarter. So that's for the whole year. Q4, 2023 projection showed that inflation over that period was going to be 11.4% and 9.6% respectively. So clearly what you are seeing is that there is this movement of inflation away from the target band. So it is that which prompted the committee to take action to try and steer inflation back into this. As you all know, inflation is a thief in the night, that it erodes the purchasing power, and this is why, as a country, we saw it fit that we should have a focus, one of the institutions to have that focus on inflation, and that happens to be the Bank of Zambia. The Bank of Zambia Act mandates that we should focus on price stability and financial stability. So what we are saying is that increased deviation from the band is driven primarily by the persistent depreciation of the kwacha and the effects of adverse weather conditions on food prices. So the committee noted that these factors do actually remain also upside risks to inflation outlook. In other words, what we are saying is that these have not gone away. Going forward, they can and may actually hurt us further. So it's a warning that maybe we need to be alive to that and take measures to address the underlying factors pushing these particular elements. Focusing now a bit more on the foreign exchange market, what we see, as already pointed out, is that the kwacha was depreciating. So we show you graphically what that means. So we have 4 reference currencies here that we are comparing the kwacha to. The one which is talked about mostly is the relationship between the kwacha and the US dollar. So that one is the heavy red line in the chart, which is near the green line. The green line, that is the relationship of the kwacha to the South African rand. Then the top one, that's the relationship of the kwacha and the British pound. And the one in the middle is the exchange rate of the kwacha to the euro. So what you see in all these things is that the exchange rate has been depreciating against these currencies. So at the end there is a slight kink But overall, what we are saying is that the exchange rate has persisted to depreciate, and that is contributing to the price pressures that we are seeing in the economy. Now, in 2024, this pressure has continued, and hence our action to try and deal with this. Now, what is behind this? What we observe is that there is constrained supply of foreign exchange in the country. This is happening at this time when there is high demand. High demand also comes from the fact that you appreciate we came from the COVID, and a number of entities are trying to gear up to catch up when they lost business, and also to even grow going forward. So that is putting pressure on the little supply or limited supply that we have of foreign exchange. So how does that really come through? What we note is that the main source of foreign exchange, which is the mines, of course, has been declining. The chart on the right side of the slide here shows that from Q1 2022, you see how the mineral tax receipts have been coming in. So the brown part is what is depicting the mineral royalties, and the other one, the non-mineral royalty. The blue one is what is the mineral royalty. So both of those elements are coming down. And this is causing the constraint that we are seeing. Now, to try and deal with this in managing the volatility that we see in the exchange rate, the bank provided support of $215.5 million in the market. Much of that came from these very mineral royalties and non-mineral royalties that were provided to the market. But to try and meet that excess demand, we had also to dip 31.4 million from the reserves to meet critical imports and make debt service, because contrary to the belief that we don't service debt, we are servicing debt of the multilaterals and some of the critical projects. So there is an outflow in that regard of foreign exchange. Now, to try and deal with this, we raised the SATO reserve ratio. Last year, we raised it quite significantly as well, over 800 basis points, but we saw it fit that we must raise this further in 2024. So we raised it by 900 basis points earlier this month, so that we rein in some of the liquidity that is in the market. I must hasten to add here that the government also moved in to mop up its deposits that are not being used in the commercial banks. This move is still underway. We expect that continuing doing that will make it possible for our signals to work better. But more importantly, it will lead to a situation where the government does not end up borrowing its own money. And this is also the money which is used to affect the exchange rate in the market. So government money is supposed to be working money, meaning that you don't keep it, it must go to projects that are running. But we have observed that over time, this money tends to sit on the accounts of commercial banks, and that's not consistent with even the idea of the government automating its cash management. You know that the government introduced the single treasury account. It also has invested heavily in other automation projects. Equally, on our part here, we have invested heavily in the payments systems infrastructure. So movement of money should not be a problem. So we don't see it right that this money should be sitting there idle when there are needs that need to be supported. So here, what we also this time want to share with you is that, see, what seems to be going on in our market is that focus seems to be solely on these mineral royalties that we are getting a non-mineral royalty taxes from the mining sector. But what about others? What are these the only things that are going on in the economy? Of course not. There are other things going on. But what is happening to those monies? This is the question we are raising, and we are looking into finding out why is that. But for a start, we want to show you that when we look at interbank foreign exchange transactions, these have dropped to $14.4 million in the fourth quarter of last year from $185 million in the third quarter of last year, which means that the interaction among banks is all but non-existent. Means that there isn't much trading going on among the banks, and this is the issue. We are saying that if we are to grow this economy, we have to diversify our sources of money. Yes, banks buy also dollars from market participants, but they also are in a position to support exporters. And I think, I don't know if I mentioned it last time, but what we are saying is that we are encouraging them to onboard exporters so that they can begin to generate more foreign exchange as well. Now, notwithstanding the support that we provided to the market, we indicate that the reserve position actually increased to $3.3 billion at end December 2023, which represents 3.7 months of import cover. And this is an increase from the 3.2 months of import cover when we last met, when we said the end September. This is shown on chart 5 on the right hand of the slide. The rise in reserves was driven very strongly by the disbursements that we got from the IMF following the successful completion of the second review under the extended credit facility. I think this information was well covered by yourselves in your respective media houses. The other support came from the World Bank by way of budget support. We received $125 million or thereabout, depending on the exchange rate, because these disbursements are done in unit. For the IMF, it's the SDR, and the World Bank also follows that. So when we convert into dollars and kwacha, that's why you see the differences in the figures. Now, I should also point out the significance of these developments. One is that the IMF, as you have read from their report, and in fact, the mission chief even shot a video on this, the significance of the support that they are providing. Colleagues, here sometimes when there is mention of the IMF, people tend to wonder why is place such an importance on one organization? The answer is simple, especially in financial markets. This is an institution which is established by 189 members. These are countries. So these members, to which we are part and parcel of that, and our voting power in terms of sub-Saharan Africa is not trivial. In fact, when we look at SADC region, we are number 3 in terms of voting power. We are number 3 to South Africa, which is the largest, followed by DRC here next door, and then Zambia. And when we look at the sub-Saharan Africa as a whole, which has 45 countries, we are number 4. So we are not an ordinary member in that respect. When we joined the IMF in 1965, our economy was doing relatively well. That's why our quota size compared to other countries remains that significant. But more importantly is that financial market players, investors in particular, want information that is credible and that is provided regularly. So as part of our undertaking by being members of the IMF, we are required to provide information on a regular basis. So they do what is called surveillance. So you don't have to have a program with the IMF for them to provide a report. They provide a report for all the 189 members. And it's that report which investors find useful to see how countries are performing. So that is one of the critical reasons why the IMF features prominently in these discussions. You also recall that in 2008-2009, we had what is called the global financial crisis. When that happened, the IMF was even given more powers to provide surveillance over the global financial system. And that's why whoever needs information quickly runs to their website to get that information. So I thought it was important for you to understand why we keep making reference to the IMF is because of its standing in the financial sector, or the international financial architecture is at the heart of it. Then in terms of the other disbursement from the World Bank, it's also important to underscore that this is budget support. Budget support is only provided if this particular multilateral institution and the African Development Bank is satisfied that the macro is moving in the right direction. So it's an endorsement of that assessment that leads to this. It's also important to stress that in spite of the pressures that we have been having in the foreign exchange market, our foreign exchange market is still deemed to be operating in a manner that is consistent with market principles. What do we mean by that? Well, when there is pressure on a currency, oftentimes you see emergence of parallel market. Some may say the black market. I would like to challenge you that maybe if you are seeing any black market, let us know. Because as far as we are aware, we don't see any black market emerging, which shows that people are using the normal channels. And that is significant because in other settings, you see that black market is the order of the day. We had that too some time back, but not this time around. So I thought it was important for you to appreciate that in spite of the challenges that we have, there are certain things which are still working in our favor and which give us the optimism that going forward, things will be good. Often we also get questioned, what are your gold reserves that you have? So we thought this time we'd be upfront and provide this information to you in this manner. So during the period, we bought an additional $43.2 million worth of gold, which has brought our holdings of that particular asset to $150.5 million. Credit developments. Here, what we want to demonstrate is that there has been some positive movements in terms of fiscal consolidation, which we had been pressing for in the past. So this is emerging, and this is shown by the fact that if you look at the chart on the right-hand side, you will note that in the earlier period, say from December 2020, you see that the chart was dominated by red color. That red color represents the credit that went to the government. But since about September 2022, we see that the blue is beginning to take prominence in the charts. And that has been rising, going all the way to December 2023. So what is the significance of this? The significance of this is that we want to see more intermediation. That means reliance on the government has to reduce, because in the times of crunch, the reliance of financial sector was on the government activities. But with this fiscal consolidation, the crowding out that we are talking about should begin to change. Banks should begin now, and other financial institutions, to come to you for business, so that we have normal functioning banks and financial institutions. So here I want to show you something which we have not shown before. These two charts, on the left-hand side, we are showing how the deficit, the cash deficit of the government has developed over the years. You see the blue colors are the actuals up to that point. You can see that this has been coming down. The brown colors, this is the target that the government is aiming for. Now, the dotted black line is the 3% mark, which is considered to be the level where deficit should be if we have to be sustainable. So you can see that the aim of the government is to be below that line. And that's consistent also with some of the agreements we have signed. For example, under SADC, there's the mechanism for convergence. So everybody is supposed to be pushing towards that target, which means that our economies will be much stable. So this, as it's developing, we expect that then more activity should be in the private sector rather than with the government. So on the right-hand side of the slide, we are showing the loan to deposit ratio, which in simple terms may be referred intermediation. That is, the banks and financial institutions getting money from those who have surplus by the way of deposits, and then lending it to those who need it for investment. But what you see is that this has been coming down, which means that the loan to deposit ratio has been declining rather than increasing. So going forward, it is our expectation that we should see a change into this. For banks, we have been also pointing out the need to not over-concentrate their activities on the government. And this, I'm sure you have picked it, where the movement of balances from the banks to the central bank is receiving some pushback in some cases because they feel they will have difficulties having the liquidity that they need. But what we are saying is that that's how a normal system is supposed to work. Why we have TSA is to be able to sweep that money at the end of each day so that the next day you start afresh, you have an opening balance. But you see, in the financial sector, money doesn't go to sleep. Overnight, money earns interest. So this is what we want to address so that there is more activity in the private space. The last but one slide is on the economic activity, that is growth that we are talking about. What we are saying is that we saw some increased economic activity in the fourth quarter of 2023. Part of that had to do with the seasonal demand. Many business houses, they stock up before the holidays, so that tends to push demand, and this also translates in some of the demand we see in the foreign exchange market. But what we really want to stress is that, notwithstanding the challenges that we face currently, when we look over the horizon to the medium and long term, the prospects for our country are very strong. So one of the reasons why we are doing what we are doing, which may appear not supporting the activities of players out, is that we want to have this growth robust, because with inflation, it won't be robust. So the pain that may be experienced there is a pain which will make us better in the period ahead. When we are making these projections, these challenges, although we highlighted them as risks, were not quite that prominent in terms of agriculture, these adverse weather conditions. So perhaps next time when we meet, we'll share the experience that we have gained over this period we are going into. But the idea is that to get agriculture going, and we should be able, if we invested in systems of collecting water and doing irrigation. So this is a homework for all of us, and for us here, we have staked out by putting some funds available to the private sector through financial institutions by way of credit guarantee schemes. So we have yet to see players coming forward with ideas of how they could use these resources to help boost production. So the chart on the right there is showing the different projections. The red one is our own in-house projection. Then the green is what the Minister of Finance is projecting. Then we have the IMF through the November report we are projecting. And then the last one is the Focus Economics. It's another group of forecasters, which both in all these cases is a matter of degrees. There is an indication that economic activity should improve in the period ahead. To conclude, we just want to reiterate that the Monetary Policy Committee raised the policy rate by 150 basis points to 12.5%. Is still below where inflation is. But our assessment at this point is that these are the measures that we have taken. For example, the mopping up of liquidity, the issue of interventions in the way of foreign exchange sale, these all act to reduce the liquidity in the market. The other thing to note is that the exchange rate, for you to continue exchanging kwacha and the other currencies, you must have kwacha. So at some point, that will turn into too much of a negative that you stop, and then we start seeing innovations in the way of import substitution and the expenditure reduction. We understand, and we are not naive to think that this can happen overnight. No, but it's something that we have to work on if our economy is to remain sustainably strong. If the exchange rate has to remain stable, we have to earn more foreign exchange and reduce our demand for some of those imports, because we could do without them by producing some of those things locally. So the committee is not blind to the impact of the decisions that we take on the stability of the financial system, because if the financial system is not stable, it means that even these actions that we are undertaking will not be actualized. So we have to make a careful balance between what we are doing here and what it does to the financial system. We also keep an eye on what is happening to growth, because in the final analysis, this economy has to grow and grow strongly for us to tackle issues of unemployment, issues of poverty, and so on and so forth. But the committee is also alive and encouraged by the continued fiscal consolidation efforts, progress that is being made on the external debt restructuring, albeit slow, but we note that there's been some progress, and the improved prospects of increased investments. I think there have been big announcements recently, what is going on in the mines, but we need that to happen in other sectors of the economy so that we have balanced growth going forward. And we note that these are all critically important to the attainment and maintenance of sustainable macroeconomic stability. Thank you for your attention. God bless.
Thank you very much, Governor, for that presentation. So there you have it, the MPR raised by 150 basis points. At this point, we are going to take questions from yourselves. And as always, we'll take 3 from our online audience. For those that are here, please raise your hand. A microphone will be brought to you. State your name and the institution you represent, then you can proceed to ask your question.
Thank you very much, President. Governor, members of the MPC, thank you for according me this opportunity. My name is Mwelwa Chivesakunda. I last visited you last year from the institute called Financial Insight Zambia. My question might be a bit loaded, but it's all intertwined. I would like to just further understand around the progress on the debt negotiations. We understand that the central bank has also been a party, to this particular process. I think of keen interest to us is there an end date in sight, as it might give some indication on the positioning. Further to that is obviously we acknowledge some of the interventions that the central bank has made regarding stemming the volatility around the currency. However, we've also noted that now there's also leaning towards using some of the reserves. Our question around that would be whether that would be sustainable in the long term as we try to sort out the issues around mining. Then finally, the question I have is around the recent ask by the central bank regarding commercial banks holding funds transferred to them from the Bank of Zambia. If an explanation could be given regarding what the benefits would be, considering that some of the funds that the banks would normally be lending would then now be constrained by the central bank. Thank you.
Thank you. Next.
Good afternoon, Governor. My name is Sandra Mninga from Sun FM TV. I have 2 questions. The first one is, following the measures that you have put in place, should citizens now brace themselves for more difficult times until the measures that you've put in place really yield the intended results, because the rise in inflation and the instability in the exchange rate is affecting the economy and citizens at large? Then the second one is, following the introduction of the 5% threshold for foreign investors, what are the current outstanding holdings of the local securities by foreign holdings investors? Has that helped achieve a lower foreign outstanding holding for local securities? Thank you.
Morning, Governor. My name is Kalunga Mwape from Millennium Radio. My question is on the recent increase in the statutory reserve ratio, as well as now the MPR. The decision that you've made seemed to map up liquidity from the economy, meaning that, one, with the decision that has been made today, the cost of borrowing goes up, meaning that the private sector will not really go to the banks because the borrowing rate is going up. The informal sector as well, small, medium enterprises will not be able to borrow. And in your statement, you mentioned to say you want to see more activity in the private sector. But with the decisions that you've made, don't you think to say that is going to have a negative impact in terms of the private sector activity in the economy? And of course, going back to the government in terms of activity. Thank you very much.
Thank you very much, Kalunga. Governor, you may take those.
Thank you. Thank you very much to Mr. Chivesakunda for your questions. Unfortunately, we can't give you granular information on the debt negotiations. I think that is squarely in the purview of the Ministry of Finance. So the minister, I think, it does from time to time provide updates on how that is going. But what we can say that, as has been pointed out in the media, we are not sitting idle by. There are discussions going on, and the indications are that there is some movement, but exactly what that movement, I think the minister will make that pronouncement. But you will note that there was the signing of the MOU by the OCC, which would help to pave the way to have focused negotiations with the other creditors. Because with the agreement on the MOU with the official creditors, at least a way forward was found with that group of creditors. Now it's the issue of getting the other creditors on board, and the MOU is supposed to be used as the basis for those negotiations. In particular, there are issues of comparable of treatment, which the OCC members see it very, very important. You note that earlier the government and the bondholders had reached an agreement in principle, which the IMF also thought and felt that it was consistent with the debt sustainability analysis, but the official creditors felt that that didn't go far enough. So further discussions are being held on that, and also completing the signing of the MOU. I think that's what we can share with you at this point. So indeed, like we have said in our thing, we hope that this process will come to an end, because it's a drag on the other things that we need to see happening on our economy. Because we are still we are in default, which is a fact. I mentioned in the presentation that the debt service that we are making is to the multilaterals, because those are expected to provide additional concessional financing, which they are doing. Like I mentioned, the IMF and the World Bank are providing this. So for that to happen, they could not also join the restructuring, but they should provide new money, which they are doing. We are expecting also to get some support from the AFDB. So these are the understandings under that framework. I refer you also to read, those of you who haven't had the chance, the IMF reports, which were done in relation to the conclusion of the second review. I think you'll see there will be more information. There is more information there on the significance of some of these, including the targets. Sometimes we get questions on. They are all spelled out there, what we are doing. So there is full transparency in terms of what is going on. Then the other question you raised, was on the dipping into reserves. This is not a very easily taken decision. Remember, we get asked this question, is this sustainable? This is what we want to have, sustainability. But you have to work towards that. And in working towards that, sometimes you have to do certain things to get things going. Because what do we mean by sustainable is we are in effect saying that all these macro variables should be stable. Now, you note that inflation has been rising, and rising quite strongly. The exchange rate has been depreciating. So really, our macro stability is threatened. So if we sit idle by and say, no, we can't do this because we don't have this, then we may end up with a worse situation than we currently have. So doing nothing has its own major complications. Doing something also has some risks, but you have to take calculated risks to be able to move. I think for you, anybody in this room, you came here, took a risk to come here. You could be bumped by a car outside as you are moving, but you made it here because you felt that being here was very important. You wanted to do this. So in life, we make progress by taking risks. Nowadays, we say that risks are to be managed, you identify. So the debt service that we are making, it has to be made, because if we don't make it, we'll fall in default again. So you can't wait to say that, no, because the reserves I have are small, then I cannot make the debt service, they will finish. That will be a big mistake, because then you may end up with a bigger problem than you currently have. So the question on sustainability must be interrogated around that point. Also, to be mindful of, the situation is not normal. We have quite a lot of challenges that we are facing, not just as Zambia, many countries, including developed countries. So to manage those, you are going to do certain things which perhaps if things were normal, you wouldn't do. But you are doing that with a view that you want to overcome your challenges. So this is how we think we ought to look at this. We hold reserves to be able to support us when we need certain things to happen. For example, if we didn't support the market and you went to the filling station and you didn't find the fuel, what would you say? Would you agree that, no, the central bank is this money, but we have shortages of fuel? If you went to the hospitals and you found shortages of medicine, would you be happy to see that there are these shortages and not doing that? So it's a trade-off that we have to make, and make it in an informed way, that we unlock certain things which will help us to get the much needed relief that we need to go. I hope that explains that point. The other question you raised on the benefits of moving government deposits from the commercial banks. By design, government money is not supposed to be kept. When you pay taxes, you don't expect that those taxes will be kept without you getting the services that you need, the products that government produces to be provided. Now, when money is sitting in a bank account, who is really benefiting in that situation? That's the question you must ask, because it means that one intended objective is not being met. It also may indicate that there are bottlenecks in that money being moved. So this is why, for example, the government has taken the action to revise the CDF law so that money can move as quickly as possible. But you see, when money is sitting in a bank account, someone uses it. It doesn't just sit. Yes, you will be checking that my balance is there but someone is using that money. Now, it can happen if it stays long that, of course, as individuals, we borrow our own money. If you are putting money aside there, when you go and borrow, you are borrowing money which is, because funds are fungible, right? But for government, the idea of creating all this single treasury account, infamous, this government service bus, is to make things move quickly. But if money is not moving, then we have a problem. And that problem now can be emerging from the money itself. Instead of solving the issues that we wanted to solve, it's actually adding to the challenges that we are facing. You'll be complaining that there's crowding out. That's precisely that, because money has to go into circulation. You know, you are paid, even as we are in public sector. Sometimes people forget that we also pay taxes. Even if you are paid tax on tax, you also pay taxes. So that's how the economy moves around. So if money is being held for government, that's why government doesn't have fixed deposit. Government has current accounts because money is supposed to move. So it's an anomaly that money should stay, especially stay there for longer periods. The payment systems that we have developed are meant to make the movement of money faster. You know, now you don't have to go to a post office, for example, or a bank to transfer money to somebody. Right now, as we are sitting here, I'm sure some of you are either sending money or receiving money. While you are seated here and watching and participating in this, that's how the payment system works. So equally, the government should make that happen. I hope that helps, but maybe Dijo, you can add something on that, because this matter keeps coming.
Thank you, Governor. No, Governor, I think you've really put it correctly. I think if you look at the overall efforts the government is making in terms of the budget and public sector reforms, one area is exactly been this idea of cash management and how you manage your funds in a more efficient way. So I think if we look at the big measures which were implemented, you had the IFMIS, which was done, and as Governor is saying, all these new payment systems which were meant to help us to have a more efficient use of funding. And I think what we've found is that over time, we're seeing that the balances which the government had in their accounts were growing significantly, almost working against the very process of having a more efficient public finance. And so what we were sitting on, I think more recently, the funds in the government accounts in commercial banks had gone up to something like 14 billion. And effectively, we could see these as the funds which commercial banks may have been lending back to the government, funds which may have been used to trade in the foreign exchange market, and so on. And so the idea of moving funds back into the Bank of Zambia and these funds being able to be utilized by the spending agencies as and when they need, we think is a much more efficient way of making sure that the government public cash management is working in a better way. Thank you.
Thank you very much, Dijo. I'll ask you also maybe to weigh in on Isaac on the cap, the 5% cap. But first, let's see, perhaps address the issue Sandra raised over that these measures that we are taking, are they not indicating that citizens now have to brace up for harder times? Colleagues, the situation is far from being normal. Unless maybe others are not seeing. If inflation is rising, it's eating away in your purchasing power. If the exchange rate is rising at the rate it is, it's also eating away from your purchasing power. Now, we have a choice to let this continue, and then one day we wake up and find out actually we have hyperinflation, where you will not even want to touch money. We have seen it in the neighborhood where inflation became hyper, that you are sitting in a restaurant, let's say if you like going to restaurants, when you just enter, they tell you this is the price. By the time you finish eating, the price has changed. We have seen also merchants now They are not putting prices on certain commodities. You see, they have put a black marker because they say they don't know what the price will be, so they leave it blank. So to know the price, you have to ask somebody. Whereas before, you could find prices posted. Why is that? It's because of this fast changing environment. The rate of the kwacha is changing, inflation is going up. So this is what we want to arrest, that you should be able to plan. You get invoices now. You are lucky if you get a 30-day invoice. People tell you this is valid for a day or it's valid for a week. Why? It's because they are not sure what the price will be. So this is very, very damaging to the future of the economy. So this is what we want to arrest. It may look contradictory, but actually it is not. It's like if you are also sick, you go to the doctor, you have to be operated on. They have to cut something to be able to reach the problem which you are assessing. But that doesn't mean that they don't want you to be well. In fact, they want you to be well and well quicker. So this is how you may want to look at these measures. They are intended to cure something which is running away. If we don't do anything, like I said, things will only get worse. And then you turn around and say, where were you? After all, the Bank of Zambia, when we read the act, it says you are supposed to do something. So we are doing what you told us to do, that you watch this, and if it gets out of line, do something. This is what we are doing. Now, having said that, we all have roles to play. This is our role. Others also have to play their role. You are playing your role by being here as journalists to gather this information, disseminate it to others. Now, sometimes we get angry that, no, why did you report this? You should have. But you are doing your job. Should you stop because the situation you are reporting on is a difficult one? Would you stop? I don't think so. You want people to know that this is difficult, and by informing them, you are equipping them with some of the information they need to make a better decision. So this is how we must see this. There are trade-offs in anything that we do in life. There is a trade-off. That means you can't do another thing when you are doing this one. So for us here, our role, you said price stability. And we are seeing prices are changing rapidly. That's not good because you cannot plan over a long horizon. And if you can't do that, then it means that you can't invest in long-term projects. And it's those long-term projects that we need to be invested in so that we have continuous benefits to reap. So that's how you should see these things. It's not that we love doing things to head. No, we are correcting a problem, an underlying problem that we need to. But as I said, we are one part, there are other parts. You as a citizen, you have a role also to play. When you see these things, what does it mean? It means that you become now more focused on what you do, where you want to put your money. So that's what this will be. But if we don't take this action, then we'll be in a worse off situation than we are. I hope that is understood where we are coming from. Maybe now at this point, there's another question you asked about the cap on the non-resident holdings. How is that doing, and what is the holding of domestic debt by non-resident holders? I'll ask my colleagues here to jump in. Isaac, who is seated there.
Yeah, the outstanding bonds are about, treasury, let me just say government securities, about 57 billion, which is 20 25% of the total outstanding securities. That's for non-residents. Yeah.
Okay. Has it increased or reduced? I think that's the other thing what you're saying.
Well, it has increased, but it has increased within the parameter that has been set. So, I mean, the point is that there is still a lot of interest for Zambian paper from non-residents, but they cannot purchase as much as they would love to because of that cap which she made reference to.
Okay, we hope that is good enough for you, Sandra. But if you are not satisfied, we can take it offline as well. The last question was from Mr. Kalunga Mwape, which is somewhat similar to the question that Sandra raised, that don't we see that by raising the monetary policy rate, that is going to increase the cost of borrowing and really not encourage what we want to see? The answer is not exactly. Is what are we trying to prevent here? We are trying to prevent the entrenchment of inflation in the economy. Remember, in the minister's budget speech, he outlined the macroeconomic objectives that he would like to see achieved this year and in the medium term. So, what were those? One of them was that inflation must be within the 6 to 8 bands. The other was growth must go up. The other was the deficit must be within. So all these must talk to each other. Now, just generally speaking, the economy is in 4 parts. For convenience, we divide it into 4 parts. One part is the monetary, which is where we are as the center of the financial sector. And what do we get there? It's the interest rates, which is what is the cost of money, which is the cost of borrowing you're talking about. Then the other part of the economy is the external, which is you get the exchange rate, the interplay of our exports and imports. You get the exchange rate. Then there is what we call the real economy, where these economic activities are taking place, where most of us are as individuals. There, what do we get is the inflation. So exchange rate, inflation, interest rates are all prices which are reflecting the underlying things. What is the fourth side? The fourth side is the fiscal, which is where the deficit we are saying. So at any given time, an economy is a system, it's like the body. All these must move in a certain way. If one is not in order, that's what we are saying, that there is macro instability. Now, our role we are in is standing in between all this, in the center. When we are looking at inflation, inflation is impacted by what is going on in the external sector. We talked about the exchange. It's impacted by what is going on in the real sector, the price of goods and commodity and the services that we see. It's impacted by what is happening in the fiscal sector, the deficit or the surplus that is going on. So if any of this is being done in excess of the other, it shows that in the price. The price, in this case, we're talking the rate of change in the price, which is inflation. So what we are doing, we see that this is getting our way. You may delude ourselves to say that no, because if you are doing this, then you are going to hate our thing. It means that we have, over an extended period of time, we have to face the consequences of these rising prices. So what we are trying to do is that to cut that time that this will lead to positive thing. So that means you have to take drastic measures, isn't it? So this is what you do even in life. You have to cut certain things to focus your attention on something which is more fundamental. You drop these which are not that important. I think I will give you an example. When you are in an exam, you are writing, you are told the exam is for 1 hour. You are given a paper. What do? If you have to pass that exam, you have to read the questions, right? And allocate time in your mind. You say, no, this one I'll stand this. Now, suppose now the examiner says, now you have 5 minutes to finish. What will you do? You can't now do even all these other things which you knew. If you are not using that time correctly, you fail the exam. So equally, maybe that's overly simplified. This is what we are seeing, that this economy is overheating. So we have to do something to cool it off. If it was a vehicle, you park it first so that it cool off and get water to pour in so that it cools and moves on. So this is how you must see these things. It's not that we are, like I said, loving to hate this. We are correcting one bad thing, but we are doing it in such a way that it still enables. That's why I said we have to look sideways, look backwards to see what is happening. We are not moving here blindly. We are looking here to persuade other players to do their part. Because if it hurts, you must do something. Of course, for the people who are vulnerable, they don't have anywhere else where to park this. This is where the government comes with these interventions, social transfers. People have been calling, we want subsidies. The subsidies have taken a different form. They have taken the form of these cash transfers. This is social protection, because it is understood very well that in the process of reform, there are winners and losers. So how do you compensate those who are not able to fend for themselves? That's why the government comes with these other programs. Now, you say they are not big enough. It means that the government has to tax more to get more money to pay. So there is nothing for nothing, Whatever you do, someone is paying somewhere or somebody is gaining. So here what we are saying is that if we are to participate effectively in the potential that lie ahead, we have to take certain measures now. Because if we don't, these will be mere dreams. So if you just keep dreaming and you don't try to do something to actualize your dream, it will remain that a dream. But others will say, well, me, I dreamt and they actualized this. That's what we want to see happening. I hope that helps to contextualize the actions that we are doing. It's not that we want to hate that, but if we don't do what we are doing, this will get worse. And then you say, oh, here now is unbearable. But while this is going on, obviously, there are these pressures that we to exert. So it's up to us as players, where do we focus our attention now that this is more problematic? That's the debate we are pushing. That's the issue we are pushing through these actions, that those who are able to do something, they will say, no, we are tired of this, we want to do something else. And then we'll see more activity happening. But if we don't do that, even those who were willing to come and do something, they say, no, your situation is bad. We always complain when we meet in some of these meetings. People are running away, say, no, we'll come to talk to you when things are okay. But don't I need you more now when things are bad? They say, no, but we don't want to risk our money in your environment. So this is what we are trying to do, to make the environment going forward a lot more conducive to doing business. Right now, it's already hard, we know. But if we don't do anything, it will get harder and harder and harder. So the choice is ours. Do we want to try and shorten this or prolong it? Those are the trade-offs that we have to make.
Thank you very much, Governor. We will now take 3 questions from our online audience. Unfortunately, there are a lot of questions, but in the interest of time, I'll just pick 3. The first question, Governor, is from Cholam Pasa, and the question is, why can't the Bank of Zambia consider introducing some mild exchange controls? The second question is from Longo Oliver Simumba, and the question is, how far is the central bank willing to go with tightening monetary policy, considering factors such as inflation, which is projected to be at 13.4% next month? Is the adjustment sufficient to combat inflation? The next question is from Melissa Santo. And the question is, you have talked about this, but you might just want to add. This person is asking, as Zambians, what do we need to do to help improve our economy? Then the other question is, why are we not paying our debt using the minerals specifically mentioned gemstones? You may pick those, Governor.
Yes. Mild exchange controls. Those of us who were able to witness what we witnessed in our life, we said, no, we don't want exchange control. I'll take you back to 1991, when there was a return to multi-party politics. The situation was very bad. There were shortages everywhere. You went into these state-owned shops, there were shortages. You had the money, but you could not buy. We were actually a laughing stock in the neighborhood. Our colleagues across, they were laughing. We go there to buy mazoe, to buy jam, to buy salt. You name it, we had to go there. If we went into some of these who had the privilege of getting foreign exchange because they knew somebody in the system, they rationed whatever they are selling. Those who drink beer, you were forced to buy something you didn't want. You have just come from eating from your home. You said, no, you can't drink a beer unless you buy food or you buy some eggs or whatever they were offering. And sometimes those things were not in good shape. They were rotten. But because you wanted that, you had to do that. You found a queue forming. You don't ask questions. You just join in because you think there is something essential commodity being sold. I think I've told this story before, and I'll tell it again, that sometimes you go there, you find that at the end of the queue is body viewing. But you have spent a lot of time, because if you start talking, they will chuck you out of the line, you know? And some people still remember, those who were old enough, what was happening. So exchange allocation, at one point, you are entitled as a national 500 kwacha equivalent for the whole year to exchange and do that. To do that, you had to go to your bank and apply to the central bank for an allocation. The central bank had a committee with the appointed individuals. They will sit on a Friday, that was, and they decide who gets the allocation. It was not on the basis of the need is, so who is this one? Not this one. You don't get. So foreign access to foreign exchange became the preserve of the privileged. There was a seated, which was the state apparatus to monitor that citizens towed the line. So if you are found with $1 in your hands, it was a big issue. Where did you get it? You know, we had at one point, even in duty-free shops that were for non-residents who had external foreign passports. So citizens now, you had to ask those if you knew any. You find people hanging around these shops to access some of these goods. When Zambia Airways was in operation, the air hostesses and the stewards were heroes because they are the ones who are going out of the country and come with these merchandise. So is that really what you want to run an economy? So Zambians said, no, this is enough. So in 1994, the government did away, suspended the exchange control so that people get allocation efficiently. You don't have to know anybody to get foreign. You don't know a bank governor. You don't need to know a director at the Bank of Zambia or a director at a commercial bank. Now we have made it easy. You have a card which, using your kwacha, you can go anywhere and be able to transact where you see a Visa logo. All these are improvements that has happened. So we signed on internationally too that we don't want this. So under the IMF Articles of Agreement, there is an article called Article 8. We signed on to this, but we still have a backlog of people who had put money in a commercial bank, who in turn deposited it with the central bank with a hope to get foreign exchange. Back in 1994, somewhere there around, the government did a debt buyback arrangement, the situation in which more or less we are facing, so that those who wanted to get something, they could get. Some came in, some didn't. So that issue is still a blight on our future as a country. So when we hear people talking about mild exchange control, colleagues, it's not a pleasant thing. Imagine you applying. We used to have this allocation mechanism, quite apart from the foreign exchange. To import goods, you have to apply to the Ministry of Commerce and Industry that, no, I want to import this. Can you authorize me to do that? Is that what we want to happen? I think the system we have is not perfect, but it delivers a superior product. So we have to work within that system to improve on it. We have, for example, introduced from the first of this year, the EBOP, the balance of payments, where now we want information. When you are exporting something, we want to know if you actually really exported and earned something. And if you bought something, what did you buy? You know? But we are not saying that we want to control your money. You can buy whatever you want, except those items which are prohibited because they are offensive under anti-money laundering and financing of terrorism. But again, barring those, you should be able to enjoy your hard-earned money. But we need information because to be able to plan and make interventions, we need to have that information. So that's what is happening. But people were saying, no, this is already exchange control. Far from it. It's not exchange control. You are still able. These who are exporting, they are Zambian companies registered under PACRA, So when they are presenting themselves, they say that I'm a Zambian company, albeit that they may be owned by non-residents. But the company, remember, a company is a person, except that is not a natural person. That's why you see, if you have a company, limited liability, you can't do whatever you please because it's your company. The law will visit you because the company is also living. It has to be protected. Just like here, because I'm a governor, I can't go on and say that I do whatever I want. There are rules. So this is what we are saying, that you are a registered company. Show your pride that you are Zambian. You know, don't go out there and no, me, I can't obey any of the rules. But then you want the benefits of being a thing. Is that fair? We don't think it is. We need that information. So we hope that this issue will be seen in entirety, what challenges it produces. I said earlier on, we don't have black market. Why? It's because of the system that we have. If we didn't have that, I can assure you, right now, people will be queuing to get foreign exchange somewhere. Is that a good use of your time? I don't think so. You don't need to do that. So I hope that helps to shed light on some of the reasons why we don't want to have exchange control. So every successive government since that time reaffirms its commitment to maintaining a liberal system. So Longo, how long is or how far is the central bank willing to go to contain inflation? As I said, that's our mandate. We go to any length because that's what you told us to do. Unless you remove that requirement that your mandate from now on stops, don't chase inflation. But if that's what it is that we are mandated to do, we have to do because that's what you saw fit to say control this variable because it has a more deleterious effect on the economy. Everybody, even if you are an active person, it affects you adversely if it gets out of line. So we are willing to go to every extent to control this, but we do it in collaboration with others. The last question was on the Zambians. What can we do, and how do we? That's the question each one of us must ask ourselves. What are you doing? Are you one who just stands and cry that this is not available? If you have something, do something. This clamor to say that I be employed, yes, maybe our school system is not. This is time also to change it so that we can be practical in what we do. Otherwise, we shouldn't expect others to come and make our country better. It's our responsibility as citizens. There are countries which are way far west, they don't have resources that we have. But we have land, we have water, we the people and young population. So all those are factors which we must harness for us to be able to move forward. So maybe the discourse that we have is to ask each other, what are you doing? So that we can look each other in the eye, say, oh, me, I'm doing this, me, I'm not doing this. That way, I think we take ownership of this. Otherwise, we'll continue to depend on others who are also fending for themselves. Is that what you want to do? For me, I say no. We must not allow ourselves. We still have resources. Let's manage them prudently so that we move forward. Maybe you can add some last.
I think we have to close up, Governor, but I think on the point of how far do we need to go, I think the answer is basically until we achieve our objectives. But it's important to know that in that context, the policy measures we take, obviously there are lags in the impact they have, and that's why we tend to move in a measured way. Secondly, as Governor has said, solving these problems at an overall system level as a government requires different actors to do their part as well. And so, as we've always said, we will take action, we'll look at the results, we'll continue to look at the evidence, and then we take appropriate action until we achieve the objective we want to do. Thank you.
Thank you very much. So in the interest of time, we'll have to close, but if there are any further questions from this auditorium, we can take those offline. So a special gratitude to the production team. Until next time, we say thank you.